Hi everyone, do you hear my voice? If you are able to hear me clearly, just write in the comment area. Leave a comment so I can carry on. Okay. So let's get started. I'd like, first of all, to welcome all of you. Thank you for joining us. I'll be with you today to introduce a new webinar regarding harmonic trading patterns, which is going to be very important. The webinar of today is all about understanding how Fibonacci numbers can be really important as they are used in identifying harmonic patterns. So harmonic chart patterns are considered harmonic because these structures have or maybe we could say have a strong relationship with the Fibonacci number series. Identified harmonic patterns confirm to crucial Fibonacci levels. As you may already know that Fibonacci patterns has numbers. Fibonacci has numbers. These numbers can be seen all around us in the nature world, and all these harmonic ratios are also present within the financial markets. So for instance, we have some important numbers. I'm going to share my whiteboard with you. There you go. We have like 23%. We also have like 38%. We have 50. We have 61. We have 100. Okay. The most important numbers, respectively, 38, 50, 61. Those are the most important numbers. Harmonic trading could be also applied in the FX market. This simply includes the identification and the analysis of a handful of chart figures. We have what we call price patterns. They would be found in the same way, but the thing is that they are measured by using Fibonacci levels. So this where you can find harmony. Guys, do you hear me clearly? Okay. So if you understand Fibonacci, it's going to be very easy to identify harmonic patterns. Therefore, a harmonic chart pattern should always be analyzed using Fibonacci retracement. Sometimes you could use extensions like Fibonacci extension tools. There are like several harmonic indicators and software programs that will automatically detect various harmonic trading patterns. The most widely traded harmonic patterns include the Gartley pattern, bat pattern, butterfly pattern, crab pattern. So there are many. So all of these patterns, each one of them has like what we call, thank you, has like what we call legs. Okay. So we have, let me just, okay, we have the leg that is X, A, and we have the leg A, B, and we have the leg B, C, and we have the last one is C, D. So four legs, four legs. Four legs, but we have here like 5 points. We have X1, A, 2, B, 3, C, 4, D is 5. So we have 1, 2, 3, 4, 5 points that make up that are made up of these points. Okay. So just as easy as this, we have this leg, 4 legs that are made of 5 points. Okay. So what is XA? XA, this could be any move on the chart, and there are no specific requirements for this move in order to be part of a harmonic pattern. AB, simply this is a move that is opposite to the XA, and it should be about 61.8% of the XA move. So it just goes this way. Any move on the chart, for instance, from this point to this point, okay, this is a move. We can call it like XA. Nice. Any move that goes against this one, the opposite in the opposite direction, this is called B. This makes AB. So it's about 61.8 of XA. So if you draw Fibonacci from XA, then B could be somewhere between 38 to 61.8 of the previous wave. Then we have BC. So from B here, this is B, that could be 61.8. The market goes upwards to make what we call C, the point C. So we have here PC. This PC, this is a price move that should be opposite to AB, goes in the different direction, and it should be 38.2 or 88.6 of the AB move. So it goes from 38 to 88.6. And this makes C. Then from this very point, the market goes downwards, just like this. And here we have what we call CD. This is where the action comes. This is the last price move. And certainly this would be in the opposite direction to BC, and it should be like 126.2 extension of BC move. If BC is 38.2 of AB, this is what it takes. If PC is 88.6 of AB, then CD should be at least 161.8% extension of PC. Okay, then we have AD. This is the overall price move between A and D should be 68.6 of XA. Okay. Now, all of these numbers are used interchangeably. Why? Because each pattern has its own ratios. Gartley has its own ratio. Bat has its own ratios. Butterfly has its own ratio. So it's all about discovering the pattern, and then you're gonna use Fibonacci retracement levels so that you can decide whether this is a butterfly or bat or whatever. Okay. Okay, guys. So do you understand what I'm saying? Okay. So let's carry on. Okay, now let's dive more into the patterns itself. Each pattern on its own, how it works. Now, first thing, I'm gonna start with Gartley. It's called Gartley. The Gartley pattern. Okay. Regardless of the history of this pattern, I don't care about this. I just care about one thing, that we are able to use it in trading properly. Each pattern would have two versions. You either have bullish or you either have a bullish pattern or bearish pattern. See? You either have a bullish pattern or a bearish pattern. A bearish pattern simply means that you can go short. A bullish pattern means that you can go long. So this is how it works. You're gonna have a bullish Gartley that goes like this. We're gonna start with X. See? Then the market goes upwards from this point. Then we're gonna have A. Then it goes down from this point. Then it goes up again. Then it goes down, but it does not go beyond X. Okay, so here we have XA, B, C, sorry, this is C, and finally D. Just as easy as this. Okay, so B, now we have nothing to say about XA. XA is I mean, could be any move on the chart. But the thing is that B must be 61.8 from XA. I think I need to use a smaller font size. Okay, just like this. Okay, and C could be 38.2, okay, to 88.6% of what? Of AB. See? And D from BC, the extension is 127.2 to 161.8% of what? Of BC. This is from BC. Okay, just a minute. This is from BC. And it also could be 78.6 from XA. 78.6% from what? From XA, from this wave. Okay, guys? This is as for the bullish pattern. Then when the price reaches this area of support, this area that is D, you might be thinking about going long. You might go long from this point. Okay. Just like this. Okay, guys, do you have any questions on this before I carry on? No questions? Okay. As for the bearish one, it is just the opposite. So you're gonna have X. You're gonna have XA. Then we have AB. See. Then we have BC. Then CD. Just like this. So here we have X, A, B, C, and finally D. The same ratios could be used: 61.8, 38.2, 88.6, 127.2, 161.8, and 60 and 78.6 from XA. Okay. As easy as this. This is for the Gartley. So these the red lines on these patterns, okay, show the 4 price moves of the chart patterns, and the green writing is all about the percentage values that show retracement relation between each of these levels. Okay, and from D, this is the potential reversal zone or the potential price move of the pattern. This is why we're saying here that since this is bullish, we can go long from D. Since this is bearish, we can go short from D. Clear? Okay. The same thing, guys, could be applied on bat or maybe butterfly, but we're gonna just change the ratios. So I'm gonna show you something here. A short, this is gonna be like a shortcut. Okay. Just a minute. I'm gonna share it with you in a minute. Okay. Okay, there you go. Nice. Now, this one, for instance, shows you how it works. So it's all about having a bullish pattern or a bearish pattern. So these are the bearish patterns to the upside, and these are the bullish patterns to the downside here. You know what I'm saying? It's just as easy as this. All you have to do is just focus on the chart and see how it works. Okay. Okay. I'm going to show you something else. Just a minute. Okay, there you go. Look at these patterns. As I just explained. Okay, we have butterfly, we have crab, we have bat, we have gartley, we have many different things. As I told you, the only difference between them is the ratios. So if you have bat, this is either bullish or bearish. Okay, X, A, B, C, D. Crab, X, A, B, C, D. The same thing. Butterfly, X, A, B, C, D. We have 5 drives is another pattern, but it's a little bit like complicated. Okay, guys. So that's it. Maybe next lecture we'll be practicing harmonic patterns. So I hope that you have enjoyed the webinar today. And stay tuned for our upcoming webinar. Thanks.